SOFI Stock pulled a fast one on us today. We thought it was going to be a beautiful day in the beginning of trading. Alongside the broad market, SOFI Stock started to rally. But what ultimately happened by the end of the day is SOFI hit a new all-time low and the markets dropped substantially. So what happened from the CPI data catalyst in the morning that was actually very, very positive until the end of the day? That's what we're going to talk about here in this video. Dive into everything SOFI you guys need to know. The big catalyst for tomorrow. It is going to be a jam-packed video, so stay tuned, buckle up, and let's get into it. All right, first things first, we got to talk about the CPI data that did come out today, and this is the main headline. Consumer prices rose 8.5% in March, slightly hotter than expected and the highest since 1981. The key points: headline CPI in March rose 8.5% from a year ago, the fastest annual gain since December 1981, and 1/10 of a percentage point above the estimate. So the estimate was about 8.4%. Headline CPI number came in at 8.5%. So that was a little bit worse than expected, but we'll get into the point here. The core CPI that was actually much better, much better than what was expected, and that's why the markets actually did rally. But it does go on to say surging food, energy, and shelter costs helped account for the gain. Real worker earnings fell by another 0.8% during the month as the cost of living outpaced otherwise strong pay gain. So actually, in the case of a wage price spiral, we didn't get anything to confirm that is really going on. So that is also another bullish thing. But let's go ahead and look at the economic calendar here. And let's look at CPI, the expectations that were to come out today. And you could see the expectation was 0.5% month over month inflation, which would be about 6% annualized inflation. Just take that 0.5% times it by 12, you'll get 6%. Now you only had a 0.3% core CPI month over month gain. So that was way better than expected. And what is core CPI? Well, it's everything that is in the headline CPI, but minus food and energy, which food and energy are the big things that Russia has really let's just call it displaced, right? Energy way up, food prices, commodity prices way up. So this is saying basically without the Russian invasion, the CPI data would have been much lower, and that's why the markets actually did rally. If you guys take a look at anything really in pre-market, once this report came out, everything started to go on a bit of a tear, and then once we opened for trading, a lot of things did immediately sell off. And take a look at the broad markets, take a look at the S&P. Same thing. Every single stock, basically, ones that are hurt by high inflation and a more aggressive Fed like SOFI specifically, but the broad markets as well, gapped up, went up, sold off a little bit, opened up, sold off a little bit more, and then started to rally. And that's exactly what we did see with SOFI stock as well. So what the hell happened? We were up about 4 or 5% on SOFI stock at one point, and we closed down 3.11% and down 0.13% here in after hours, actually hitting our all-time low at $7.37 per share right in here about the last hour and a half of trading today. Now, there's a couple things that happened. The markets were actually surprisingly paying attention to that shooting that's going on in New York. You know, the markets were kind of thinking it was like a terrorist event. Not quite sure. Says at least 10 shot, 6 others injured in New York City subway. Manhunt underway for suspect. They still don't have the guy. That affected the markets today. And then this, Putin warns Russia cannot be isolated. US and UK investigate reports of chemical weapons. And that's two things. Putin warns Russia cannot be isolated, and then the US and UK investigate reports of chemical weapons attack. Now that's what actually came out about an hour, half an hour left of trading yesterday, was this possible chemical weapons attack. We have not got this actually confirmed yet, so the markets are kind of starting to price that in, like, hey, there was probably a chemical weapons attack. How are the markets going to feel about that? And it's obviously going to be a negative thing. So the markets are forward looking for that. But the big reason why the markets actually sold off today is because the markets, they care about CPI. They do, don't get me wrong, because it makes your companies like SoFi's future earnings worth less if there's high inflation every single year. But the markets really care about the state of the consumer, and that's what we will get clarity on coming tomorrow. JP Morgan earnings are in the morning, and then you do also have First Republic Bank and you have BlackRock. Let's just throw them in there. And what the markets really want to see, I've went over this a couple times here on this channel. That's why you want to subscribe, because you would have already known this. And I was bullish about the CPI report and thought that we would see a rally, which is exactly what happened, and then we inevitably did sell off because of these bank earnings that are coming. But long story short, the markets only really care about right now two things: the Federal Reserve's balance sheet, because last time we reduced the balance sheet, the stock market fell about 25% here in 2018, 2019, and they're talking about going much faster than 2018, 2019 balance sheet reduction. So that's going to be very important. That's a big thing, but as well as the likelihood of seeing a recession here in the near term future. That is also another very important thing the markets are paying attention to. And what the banks tell us about the consumer, about how much money they have, what's the savings rate, are they getting new loans, are they spending money? That's going to be the most important thing, and that catalyst does come out tomorrow with JP Morgan earnings. On top of that, you do have PPI data, which comes out in the morning. That stands for Producer Price Index, and that basically means, take for an example, Coca-Cola. How much more does sugar cost? How much more does corn syrup cost to make Coke? What is your producer price inflation? If that goes up a lot, obviously that's going to affect the markets in a very bad way, because 9.99 times out of 10 companies pass that cost onto consumers, and that's going to help drive inflation if that is the case. And on top of that, for Thursday, we've talked about it a couple times, but you do have core retail sales. That's going to be arguably the most important catalyst of this week, along with the bank earnings, because retail sales and recessions go hand in hand, and the markets really care about the possibility of a recession. You have initial jobless claims as well on Thursday, but that usually doesn't move the markets around all too much unless there is a big move, you know, to the upside or the downside. You really have to see a big change there to get a market reaction to it in a substantial way. Now, you do have Michigan consumer sentiment, Michigan current conditions, Michigan inflation expectations. These are surveys as well that come out Thursday at 10 p.m. or 10 a.m. They will move the markets also. It's one of the longest running, most accurate surveys of how consumers feel. So that's going to definitely move the markets as well. And on top of all of that, if that wasn't enough, two big fear catalysts that are probably coming here very shortly. It's going to be, if Putin actually did use a chemical weapon in Ukraine, the U.S. has said there will be a response. We don't know militarily or economically yet. That's going to be very important once that headline comes out, that I would imagine they deem them to, yes, have you used a chemical weapon? You're going to see a very violent negative reaction in the markets pretty much immediately to that. So if you guys see a big, crazy move down in the markets, probably going to be that catalyst. Obviously, you guys would want to verify that for yourselves if you are trading anything at that time. And also, you do have COVID in China. If COVID in China continues to spread and China continues to lock down the country, that's also going to be a very bad thing for possible, inflation expectations moving down, and just the supply lines. That's going to be a big problem. So those are really the two big catalysts that really don't have a date on them. Right? We don't know when this report will be done from the US and the UK about the possible chemical weapons, or if China will lock down more of China because of COVID. Those things can just sporadically come about, and just be very vigilant of those, because that will move the markets down in a very dramatic way once new catalysts like that do emerge. Really, the chemical weapons attack, that's going to be, I believe, a more violent move down once it comes out. Personally, could be tomorrow, could be tonight, could be in a week from now or a month from now, but eventually that will happen. Now let's get into specific data around SoFi stock, and let's take a look at the option flow, and then let's take a look at the short interest for the stock on the day. and we could see the option activity, 5 orders totaling $938.41 thousand, positive order value of 100%. Starting to see a lot of 2023 and 2024 call options coming in. A 250 call for 2024 for $300,000, a January 19, 2024 call, the $10 call for $118,000 as well. So some interesting option activity you're seeing right there. It looks like a good time to buy the stock as it is at its all-time low, and a lot of that low is going to be contributed to the shorting activity we have seen in SOFI stock, with the short interest sitting at 19.62% of free float. Current shares that are sold short, 141.38 million, cost to borrow max of 5.84%. The utilization of 100%, it's still remaining high. 100%. That means that nobody's really willing to lend out their stock. Now, this is really an arbitrage data point, because there is always stock that can be lent out to be sold short. As we see, the stock keeps getting beaten into the ground. It's not because me or you are selling. Retail's not selling. Institutional investors are likely not selling at these prices. It's a lot of shorting activity that is taking place, but it's really hard to get your hands on shares of SOFI stock to sell short. And the days cover is sitting at 3.05. So that is also looking pretty damn good. If we do get a bullish catalyst, if we get a buyout, something along those lines to move this stock up, you're going to see a lot of pressure on those shorts in a very, very short amount of time. Now, as far as SOFI specifically, let's go over the technical analysis that you guys need to know. And we did, like I said, hit that low at $7.38, 37 cents per share earlier in the day. Today, we need to get back above, closer to about $10 per share. Volume has dropped off, but it did come back just a little bit today, sitting at about 58.2 million. The MACD is now bearish, has been bearish for a while, but getting even more bearish, and the RSI is almost at severe oversold levels. Now, if we get a really bad catalyst, SOFI stock could drop to $5. That's really the time to load up and sell your kidney if you have to buy more stock in SOFI. Not financial recommendations, as you guys do know. Do not sell your kidney. But nonetheless, if we do get a buyout, it's going to be a very violent move to the upside as well. SOFI is definitely a huge buyout candidate at this current moment, and I am about to average down in a big way on SOFI stock here at these levels. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Like and subscribe. Like I said, thank you guys for watching, and I will see you in the next one.